All right, today is day 19 of the US Investing Championship. And in this video, I will talk about how do you win with call options. So today, I made a small profit, $247.24, on a relatively small account. But if you are new to the channel, this series of videos is all about documenting my 2026 US Investing Championship journey. I will share with you my wins, my losses, and what I'm learning in the process so you too can become a profitable trader and investor. All right. So, and in each video, I will share with you some knowledge that you strategies and techniques that you can use in order to make more money in stocks and or options. All right. So, I have two accounts, a small account which I use for day trading, and unfortunately, I lost $38.17 today. And overall for the month, almost, well, it's January 29, one more day, for the month, but I am losing money right now overall by $85.56. Okay, and then, but my options trading account, which is the bigger of the two, right now, if I sell everything today, all right, I will be up 20.52% versus the S&P 500, which is only up 1.18%. So, which is pretty good. I feel good about it. I have a realized gain of over $7,000 already on a $36,000 account. I started this with only $30,400. Okay, so which is pretty cool. So in this video, as I said, you will learn step by step how to do call options the right way. So stay until the end so that you can watch that, right? You Because with call options, you can literally make 50%, 100%, or even more. And I will show you proof, later on, so that you too can realize that buying call options, can be lucrative, but you got to do it the right way. Okay? Because worst case scenario, if you don't do it the right way, you can literally lose all of your investment, right? You can have 100% loss. Okay? That's what you get for having the possibility of having 100% gain or more, right? So, but you got to do it the right way so that you don't lose 100% of your money doing or buying call options. All right. Like and comment this video, and if I get 20 likes and 20 comments, I will do a free masterclass on options. Totally free, nothing for sale, just educational content for you so that you benefit and learn more about, stock options. All right. So this is my day trading results. As I said, I lost $38.16. And really today there's not a lot of good setups. The highest performing stock is only up by, 48%, something like that. And there's really no stock that is trending up. It's kind of choppy, moving sideways. So I tried entering I entered one trade on ticker symbol SER at 434 by two, so actually at 470 rather, and then I ended up selling it for 434, therefore losing, money there on a $500 investment, losing $38. That's a 7.66% loss. So I yeah, so bottom line, yes, it's a losing trade, but the good thing is I kept my losses small. All right. With options trading, I made $285.40 by rolling IAG, which literally stands for I am gold. Okay, it's related to gold, and as gold goes up, then the call option goes up. And EQT, which is not related to gold, but I'll talk more about that in a later video. And because I have a lot of cash, like my options account, let me check that right now. So my options account in terms of amount, percentage versus the total capital that I have, I mean it's minuscule versus the account size. So I have 855 on one, 560 on another, 840 on another, and 2048 on another. So that will be 3000 3843, $4,300 on a 35,000 account, or 36,000 dollar, because it fluctuates, now right now as I look at it, it's 35,000, but this morning it's about 36,000. So yeah, so you get the idea, right? So very tiny. So I use part of the cash to buy SGovs. I made money in SGov, and then now I shifted to SPXL because of the way the market is going. And the nice thing about rolling the option is I got a credit as I did so, okay? And then I lock in the profit as well. So I took I took partial profit. So the way to look at this is on EQT, even though my PNL is 142, really cash wise, I got $70 out of that. So I took partial profits. And the nice thing about rolling an option is that I'm still in the trade. Now I rolled it from 52.50 to $53. And same thing with IAG. I rolled it from 20 to $21. And this one, IAG is even better because I got a $260 credit, even though the profit is only 136. So that because that, as you can see here, because I lessened the capital, sorry, so that's why I got more credit than the PNL, which is great, right? So overall, great I mean, it's not great, it's good, I guess, right? On options, I mean, not bad to have a realized gain of $285, right? All right, so with that, the wins for today. I made the right decision to buy the $50 call on EQT. Eventually rolled it, yesterday rolled it to 52.50, and today rolled it to $53. So, later on I will tabulate the overall profit, as I kept rolling, yeah, as the stock goes higher and higher, then I will just keep rolling and rolling it and rolling it to take partial profits, to take money off the table, to reduce my risk at the same time. With day trading, I'm proud of myself for not chasing the stock. There are not many good trades, there are not many good setups, and therefore I only did one trade today. Okay? And yes, I lost money, but so what, right? If there are no good setups, why trade, right? You don't have to trade if there's no trade. Okay? So, let's talk about how do you succeed with call options. But first, why buy call options, right? So here's the proof, okay? I haven't really updated this and in reality, I actually made even more money than this, okay? So, but as the time that I took the screenshot on KGC, for example, I made $1,899.68. I started it on January 9. I think when I did this, took the screenshot was on January 26, I believe, or January 25. No, yeah, 24. That's on a Sunday, actually. I took the screenshot here. So, bottom line, I made a 145% return. So what's that? January 24 to January 19, 15 days. Not bad, right? On NEM, I made a 176% return. Okay, I made 1789, and this is when I bought it, January 12 for 1015, and I made a very good return on it, which is very nice. And then on AG, I made a 74% return in 4 days. So think about that, right? So with call options, you make a higher return faster with lower capital, right? Than buying the stock, right? So if we go back here, I bought, each contract is $4.35. That represents 100 shares. So I spent $435 on KGC. And KGC, the price at that time that I bought it, or the time that I bought the call option, is $30.87, around $31. Okay, that's my buy point where it says B right there. Okay, around $31. So had I bought 100 shares of stock, I would have spent $3,100. Okay, but with the option, I only paid $435. And when the stock went up, right, you know the stock made a 18.33% return, but my options on it made a 145% return, right? So I make more money faster with less capital. Those are the benefits of call options, and that's why you should learn how to buy call options, okay? Now, how do you do it? How do you buy the right call options, right? Because as I said, the risk is with call options if you don't do it the right way. the value will go down to zero at expiry. Okay, so don't do that, right? And learn. And in this video again, you will learn how to do it the right way. All right, so let's go through this quickly. Step one: only do this in a bullish market. So what's a bullish market? If the price of the stock is greater than the 50 EMA, exponential moving average. That's what EMA stands for. And the 10 EMA is above the 20 EMA. So the way to think about this is your 10 EMA is your short-term indicator, 20 EMA is your medium-term indicator, and 50 EMA is your long-term indicator. So if the price of the stock is greater than if the market, right, is greater than the 50 EMA, and that the 10 EMA, the short term, is greater than the medium term, then the stock is bullish. All right, or the market is bullish. So for example, the S&P 500, so the blue line is your 10 EMA, the pink line is your 20, and the green line is your 50. You can set the colors here. You can use any charting software like bar chart or trading view, right? And so as you can see here, I mean, it's still bullish. So, that's why you can do call options because the market influences 40% of the stock's move. So if the market is going down or bearish, then you should not do call options. Okay, it's going to be harder to make money. All right. Then next, step two is you find the hottest sector in the market or the hottest sectors. I mean, right now, as I record this, the material sector, gold and silver related companies are hot, right? And therefore, I mean, a lot of my options, IAG, literally means I am gold, KGC, Kinross Gold Corporation, or something like that. So they are in gold, and I have AG, which is a silver mining company, which is again on silver. So yep, that's how you do it, right? So you're stacking, things in your favor, right? And then step three, you look for the best companies that are trending up, both in earnings and in the technicals, meaning in the price, right? And then lastly, well, not lastly, sorry. And then step number four, you buy the 80 delta call, okay, at expiry of more than 21 days to expire, and I know that contradicts a lot of what people say or a lot of people in Reddit, right? They will buy a 30 delta call way out of the money, expiring in 1 day. Well, that's gambling, right? Because not only you need to be right in terms of the direction of the stock, meaning the stock should go up, but it should go up substantially in order for you to be right. With the 80 delta call, right? If you're using 80 delta, the stock doesn't have to move a lot, right? And you will still be in profit, and or you you can minimize your losses, okay? And if your expiry is at least 21 days or above, right? Then theta doesn't work against you. That's a option Greek, which is related to time decay. So buy as much time as you can, and the goal is to, in doing this, is you're using call options as a stock replacement strategy, right? Instead, again, like KGC, instead of spending, $3,100 to buy 100 shares of stock, I only spent $430 to buy a call option. And when the price went up, I made, 145% return versus 18.33% return, right? And then lastly, step number five, you manage the trade. If it's a winning trade, you roll it. And in another video, I will show you why rolling is important. But the bottom line is it allows you to reduce your risk by taking partial profits and taking money off the table. If it's a losing trade, exit only if it hits your stop loss. So you should have a stop loss whenever you place a call option trade or any trade for that matter, right? And then lastly, you also exit before earnings and ex dividend dates, okay? Because earnings, it's a binary event. The stock can go up or it can go down. It's really hard to predict. And ex dividend dates, right? What that means is they declare that they will pay some dividends, and usually what happens is the stock price actually goes down by the amount of dividend that they are going to give. And so you don't want to be kind of in those situations where you go through earnings, right? And then, there's a gap down, and then you got, your call option goes to zero, or ex dividend date, then the price goes down, then again your call option loses value, right? So with that, so for example here, when I placed the trade on KGC, I already decided ahead of time that my stop loss is $29.27. And in another video, I'll explain like how do you set your stop loss, right? So bottom line, you gotta have a plan. Call options work, right? But you gotta do it the right way. So if this is valuable to you, like this video and subscribe so you can follow my US investing championship journey. You don't miss a video. And if this is overwhelming to you and you think call options are too complicated for you, I created a video in which even kids can get what call options are, and therefore anybody can. So I simplified it to the point that even kids can understand call options so that anybody can. All right. So with that, I will see you in that next video.